These small cap stocks can generate outside gains. Small cap stocks can reward long term investors before they get mainstream attention. AeroVironment. The defense contractor produces unmanned aircraft and ground vehicles. Sterling Infrastructure. Revenue growth and high free cash flow have resulted in 5-year gains approaching 500%. Perion. The 2024 election cycle can boost revenue and earnings for this small digital advertising company. Let's dive in. Here are the 3 small cap stocks that are ready to pop off. Welcome to Timely Investment Research. Small cap stocks can generate high returns for investors. These smaller companies often fly under the radar even if they have strong financials. Many media outlets don't pay as much attention to small cap stocks and focus on their large cap counterparts. However, many large cap stocks started out as small cap stocks. While large cap stocks can still outperform market indices, most of these stocks have their best gains behind them. Small cap stocks can generate outsized returns, but it is important to choose from the best investments available. These 3 small cap stocks are some investment ideas to consider. Number 1. AeroVironment. AeroVironment is an American defense contractor that produces unmanned aircraft systems and ground vehicles. Geopolitical tensions can create more demand for AeroVironment's core products. The company's recent acquisition of Tomahawk Robotics can help it gain more market share and improve its core products. The company reported solid financials to start off the fiscal year 2024. Revenue jumped by 40% year over year, while net income surged by 361% year over year. AeroVironment projects fiscal year 2024 revenue between $645 million and $675 million. The midpoint, $660 million, represents a 22.1% year-over-year growth from fiscal year 2023. The company's backlog has also been growing over the past few months, indicating more demand. AeroVironment shares have gained 38% year-to-date. The stock is pricey with a 60 forward PE ratio, but strong net income growth can make the valuation more manageable in the future. A strong quarter featuring double-digit profit margins and a market cap of roughly $3 billion makes this defensive stock worth a closer look. Number 2. Sterling Infrastructure. Sterling Infrastructure is a construction company with a $2 billion market cap. Infrastructure is a fundamental component of the global economy, and Sterling is one of the fastest-growing companies in the industry. The company boasts high profit margins, healthy cash flow, and strong operational execution. Those promises have led to one of the best-performing stocks over the past 5 years. During this amount of time, Sterling Infrastructure shares have soared by over 500%. The stock has gained 129% year-to-date. Analyzing the company's financials helps explain the stock's growth. In the second quarter, Sterling Infrastructure grew its revenue by 13% year-over-year. Net income also grew, clocking in at a 52% year-over-year gain. Sterling Infrastructure is reasonably valued with a 15 forward PE ratio and a 0.77 price earnings to growth ratio. The company has a good history of increasing its revenue and earnings year over year for the past few years. The company's profitability and positioning in a high-demand industry make this small cap stock compelling. Number 3. Perion. Perion is a small digital advertising company that consistently delivers revenue and earnings growth. In the second quarter, Perion reported 22% year-over-year revenue growth. The company also reported a 10% year-over-year growth in net income. Perion is an Israeli company that has experienced downward price movement due to the ongoing conflict. Yet, the company's financials still look strong, and a good third-quarter report can help investors stay focused on long-term prospects. Perion has gained almost 800% over the past 5 years, but is only up by 7% year-to-date. Perion had much higher gains for most of the year, but is down by roughly 11% over the past month. Shares currently trade at an 8 forward PE ratio and a price-earnings-to-growth ratio under 0.5. The pullback for Perion stock seems well overdone. The company should experience higher revenue and earnings growth rates in 2024 due to the election cycle. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.